The finance panel is focused on unlocking sustainable capital for Africa's industrial revolution. Ladies and gentlemen, we now are at a conversation that's at the heart of Africa's economic transformation, financing industrial growth. Building resilient industries requires more than innovation. It requires capital that is sustainable, catalytic, and accessible. This session brings together some of the most influential voices shaping the future of investment on the continent. They will unpack the realities, opportunities, and bold financial models fueling Africa's next industrial revolution. Let's get ready for insights that challenge, disrupt, and inspire.
Incredible. Now we have a very beautiful lineup here.
Yeah.
And our panelists, in no particular order, please put your hands together as I welcome Temilade Aduroja, Group Head, Investor Relations, Dangote Industries. Please put your hands together for her. Please also welcome Adesua Okumbo Rhodes, Founder and CEO, Ariwa Capital Management. Please put your hands together for her, please. We also have Tosin Dabiri, Managing Director, SME.NG. A round of applause for her, please. And I also have Mohammed Abdul Razak, Senior Vice President and Head of Capital Mobilization and Partnerships, Africa Finance Corporation. Please, a round of applause for him. Thank you. And moderating this session is my friend and brother, Michael Usene, Chairman, Black Cheetah. A round of applause for Michael, please. Let's keep it going for the... Thank you very much. Thank you.
All right, then over to you, Michael. They're going to do their pleasantries and introductions, and we'll be kicking off our financial panel, Unlocking Sustainable Capital for Africa's Industrial Revolution. Michael, over to you.
Thank you, dear guests, friends from Africa. It's an honor to be able to moderate this conversation. We're going to be talking about block finance for the next chapter of the African industrial transformation. You know, across all the continent, we see the same truth, is that Africa does not lack vision, talents, or pure energy. What we often see is that we lack predictable, investable environments where capital can flow with confidence. So today, our session is about this matter. And for a long time, Africa has been seen as a place for extraction of cheap raw materials. And then we import very expensive products. But there is a new generation of African entrepreneurs, investors, and policymakers that are rewriting this narrative. So we are moving from extraction to transformation, from dependence to self-determination, from potential to power. So let us start this conversation with clarity, very openly. And I would ask my panelists for us to speak very openly, clear, because here we have a lot of youth that don't understand a lot of the complicated terminologies of the finance world, but are looking at ways to start developing their own journey and needs guidance to that. So to start, I will introduce myself. My name is Michel Hussein. I born in a small town in the center of Mozambique. For those who are not familiar to Mozambique, this is a country that is in the east coast of Africa, just above north of South Africa, to the front of Madagascar, in the Indian Ocean, and bordered by Tanzania, Malawi, Zambia, Zimbabwe. And the place I born is on the corridor that brings goods from the port of Beira which is the second largest port of Mozambique, into Zimbabwe, Zambia, Malawi, and DRC. During my life, I have opened 2 factories. I have acquired 5 factories. As we speak, we have integrated all this universe into 4 different production facilities in different provinces of Mozambique. Part of these facilities, we export goods to China, to South Africa, to Zimbabwe, to Zambia, and we also produce different goods that are supplied domestically. Today, I sit as a chairman of Black Cheetah, our whole co-investment company that is focused on East Africa and Southern Africa. So thank you for this long introduction. And before we start, I would like to ask my panelists, each one of them, to introduce themselves. What do they do? Where do we work? And then we kick off. Thank you. We will start with Mohammed. Please.
So, good morning, everyone. Thanks for being here. My name is Temilade Aduraja. I'm the group head of investor relations at corporate finance at Dangote Limited. So it's the pleasure to be here, and I can't wait to be a part of this panel. Thank you.
Good morning, everyone. So my name is Adeso Akumbo Rhodes. I'm the founder and managing partner of Aurora Capital Management. We are an early stage growth equity fund investing in SMEs across Nigeria and Ghana. And we invest with a gender lens, so specifically investing in businesses that are female-founded, female-led, or female-focused. Pleasure to be here.
Well, my name is Sosin Dabiri, and I'm the managing director of Chapel Hill Denim SME Nigeria Limited, also known as SMENG. And what we do in the SME, just like Adeso, we're also a gender-focused, investment firm, as well as dealing in different subsectors such as the creative and venture invest as well.
Good morning, everyone. My name is Mohammed Abdul Razak. I'm a senior vice president at Africa Finance Corporation, and we fund all the infrastructure that drives development and industrialization of the continent. Thank you.
Thank you. We see greatly we have 2 focused entities to finance women-led enterprises. We have the largest industrial conglomerate of Africa here, and we have those who finance infrastructure. So we are complete. To start, let's say that Africa stands at a turning point where sustainable capital is essential for industrial growth. In 1 minute, please, each of you, can you share your belief in what is the single most important financial ever that will unlock Africa's next phase of industrial and trade development? Please.
Okay. So thank you for the question. I think what will unlock Africa's investment, trade development, over the last few years, example, we have DFIs like AFC, Afrexim, who have actually been focused raising funds for projects in Africa. Previously, we had to look at international banks. Before you could do any project in Africa, you had to look at JP Morgan, maybe Barclays, Standard Chartered, because you're looking for that large amount of funds. But over the last 5 years, you've seen that there are a lot of banks that are Africa-focused who have helped us build these infrastructure developments. And without them, really, we don't know where we'll be. I think one key thing to note is that the risks in Africa are not really understood by the international environment. These Africa-focused banks or DFIs understand your risks, understand the currency fluctuations, understand the delay and delays in projects in Africa and the environment. So they're able to be supportive. So I think the key thing that really can help Africa is Africa helping itself, not depending on funds from the Europe or America. But when we have these kind of banks who are focused and have the capital to just invest in Africa, when there's a sudden economic turndown or currency devaluation, they're not going to turn their backs on you. They're not going to run away because they understand the terrain and they understand the environment. So I think really just having these kind of banks that are focused in Africa, apart from the DFIs, our local banks have been also very supportive. They are stronger with strong capital. And I think this has really been what supports these big investments in Nigeria, particularly in Africa, and has helped us, even Dangote as a group, get to where we are. So thank you.
Thank you.
Yeah, no, I completely agree. Local capital mobilization, I think, is going to be the key for unlocking, Africa's potential. And I think taking it one step further from my fellow panelists, not only do we need to unlock, local capital from commercial banks and from local DFIs, but there is a huge pension fund industry that is really untapped. In Nigeria alone, we have about 26 trillion naira as of the end of September in pension assets. Less than 5% of that is getting invested into the real economy. It's getting invested into infrastructure. So I think that until we start to unlock some of those pension assets, and PENCOM has started to, have some reform around this, where PFAs are now able to invest a larger percentage into private equity funds and infrastructure projects in one of the funds, I believe Fund 2. So we're going to start seeing that. But I think until we are able to mobilize not only pension assets in Nigeria, but pension assets across Africa to start investing in the real economy, start to investing in infrastructure, because as she said, there is enormous flight risk where majority of our capital now is sitting in coming from foreign DFIs, foreign capital providers, that when you have the volatility that is, inevitable in our markets every 2 years, every 3 years, projects go on hold, businesses aren't getting funded, those are jobs that are not being created, those are, economies are stalling. So I think until we are able to unlock that local capital from commercial banks, from pension funds, from local DFIs, local insurance companies, we're not really going to see, our economies thrive. But on top of that, I think there's also a conversation around regulatory reform, ease of doing business, clarity of policy, power. So, then there are many angles to it. But I'll stay with my sister here and say unlocking local capital is very, very important. And we need to really wake up those pension assets to start investing in the real economy.
Just adding to what they said as well, I'm looking at it on another angle. It's also for us to be able to support SMEs to become enterprises, right? So if we have more success stories, then that also unlocks capital, right? So just apart from just the few names that we always know, I mean, from what we do at Chapel Hill Denham, we see a lot of businesses that are ready to scale, ready to have capital, and can easily move from being characterized as an SME into an enterprise. So I think that when we're able to unlock capital to be able to do that, that just makes more easier investors less wary as they were. And I think that would now just have encouraging more investment.
Last but not the least, what I would say, I completely agree with everyone here. But what I'll say would really unlock industrialization on the continent is what I call development, right? Every industrial project or any small scale project starts with an idea. It starts with a piece of paper. The Dangote refinery started with an idea from Alhaji Aliko Dangote. What happens after idea is somebody calls development. You need to spend a lot of money, early risk money, to develop these projects. And you spend that money without knowing if that project is going to actually come on stream or not. So what is really required is that early development capital. It's called risk capital. It's that $1 million, $2 million, $3 million, 5, 10, that will allow you to take your project from a concept to an actual project. And what happens on the continent is that 90% of projects on the African continent die at the development stage. We have a lot of bright minds this here with a lot of bright ideas, but they are not able to take that project from concept to reality because they don't have that early risk capital. So actually having that early risk capital, to use that to actually develop your project, do your studies, do your economic studies, get lawyers, get all the technical consultants in, is really what creates the pipeline of projects that banks can fund and then can lead to industrialization. So development is absolutely critical, and having financiers have the risk to provide that capital at that early stage is also very critical.
Thank you very much. I think we could carry on with you to understand how, if 90% of the concepts development in Africa fail due to the lack of initial capital, to get from concept to a full funded project, how can entrepreneurs in the continent access capital that allows them to push in that very critical phase?
So I think the responsibility starts with the banks and the providers of capital to realize that for Africa to grow, that is something that we need to focus on. So for example, at AFC, we actually have a specific team that does that. So they focus on providing not just that 1 million or 5 million, but they also assist early stage entrepreneurs in developing that project. So advising them, providing them all the technical expertise, building that project in a way that when you need the large scale funding, it's already there. So for example, I mean, when a lot of people look at AFC, they just think big projects. But we also support a lot of small projects, or we support young entrepreneurs trying to scale. So for example, we're supporting a company called Itana, which is a company building the largest digital economic free trade zone in Lagos. So currently in Lagos, if you want to search for talent in the tech sector, I mean, obviously Yapa is the place to go. You have a lot of, brilliant minds building a lot of brilliant applications that solve problems. But you need to have an ecosystem. You need to have an enclave that has all these people, that has the infrastructure, that has the power, that has the gray mind. So there's a company called Itana. It's being developed by Manjilo Lukman. He's less than 40, and he is probably just shy of 40. And we're providing them that early stage capital to actually de-risk that project. So for us, the important thing is that we as banks need to realize and take that responsibility. Obviously, there's nothing like free money, so we need to structure the deal properly. But if you're able to come in early and de-risk the project and make it bankable, yes, it might take time, but eventually you'll get there. So that's the way we think about it. So from my perspective, I think the onus is on the banks to help and structure project properly.
Thank you. I see a lot of big pen writing down. I know that you will have a lot of applications for the early capital. Let us a little bit go into the women-led financing for us to see how can in this fragmented capital pathway that exists, how about we design an end-to-end pipeline that would come from catalyst capital to commercial scale, that would enable women-led enterprises to get access to capital? How could
Okay, that's an interesting question. And so to answer that, what we do at SMENG is to build our pipeline. We have an accelerator called She Works Here, and She Works Here is the first all-women non-tech accelerator in Nigeria. We've trained over 1,400 businesses and is to be investor-ready, right? So what we find is that, businesses have been running but do not have the structure to be able to get third-party funding, which is why they, have a hard time, this subgroup getting third-party funding. And then also they just don't understand the type of funding they need, right? So some of them go looking for bank debt when honestly, they really need to start with grants, family and friends, or equity partners. And then if you want to have equity, how do you value your business? How do you How do you ensure that you're not giving away more of your business just because you need this funding? So those are the things that we teach during our accelerator. And also, just jumping as well, the importance of knowing your impact, because we're a catalytic investors, right? So it's apart from financial returns, we also look at impact, right? So we have a module called How to Measure Impact, and now start getting them into the mind frame of, you know what, if I'm an agro ally, I need to start looking really deeply at my supply chain. I need to start looking at, you know, the smallholder farmers that I use. I need to start looking at how is my business generating employment, but not just from my business as a whole, but all the business in the ecosystem that helps me run my business as well. You know, so that's something that we do. And then, of course, we can't, finance all of them, right? But we've been able to finance a couple of them. And, from the people that from our alumni, they've gone on to get funding and understanding the type of funding they need. Of course, there's still a problem here. And, as you said, with the banks as well, affordable funding, right? So, with the pricing or loans right now, it's still a problem, right? It's still a problem, but I think, from businesses like mine and, Adeswa's as well, we're not giving them options than going to a normal commercial bank and getting very expensive funding.
Excellent. Myself, I'm getting inspired on what we are hearing here. It's super. So let's a little bit about the diaspora and the capital that is unlocked. So African the diaspora capital remain largely underutilized. From a funds manager's perspective, what investments vehicles can be built and unlock more African-led capital for local industries?
Yeah, so I think that to be able to unlock diaspora capital, it's all about your track record. At Arua, to the glory of God, we now have 2 funds under management. We're going to be about at 18 million AUM very soon. And we've been able to unlock capital from the US. We've been able to unlock capital from Europe. And I think it's really about track record. So as a fund manager, when you're starting out, I always say to aspiring fund managers, just do the first deal. Do the first deal. When you're talking to an investor about a company, about an entrepreneur that has decided to partner with you, it's much stronger than just a pitch book. So for us, you were able to raise money from friends and family, put people together in SPVs to do our first investments, and just building that track record that is true to your investment strategy, and showing how you're able to be consistent in how you select your businesses and how you adhere to your investment policy, your investment philosophy is very, very important. And I also say to managers that be very, very transparent in your communications. So we have a lot of investors that didn't necessarily invest in Fund 1, but we kept them updated over time. And they then invested in Fund 2. So I think building your track record is, doing deals, mobilizing capital sources from where you can. I always tell this story that, when I first started my fund, I thought that my minimum investment, like other funds, should be $500,000. When COVID hit, that reduced to $5,000. So you just have to be very innovative in how you mobilize capital, but also be very consistent in your updates, be very consistent in your communications, in good times and bad times. And I think that's how you build trust. That's how you build a track record that, you show people how did you mitigate currency risk when there was volatility in the Naira? How did you, make sure that your company still had access to working capital and were able to have access to diversified supply chains during, times of volatility. So I think it's all about building trust. I think it's all about showcasing a track record, showcasing consistency. And, no one is going to invest in you straight away. Being a fund manager is a very patient and humbling profession. So you have to really be persistent, be resilient, but build with excellence and be very meticulous in how you update potential investors. So I think when we think about attracting diaspora, we have to think about some of these elements that I spoke to you about.
Excellent. This is very interesting because you have just pointed out that even in bad times, you must not hide. Yes, we have to show ourselves and keep reporting, keep showing to the financiers, to the world, and show that we have a commitment to our destiny, to our objectives, and we go. So we will pass team because even you being the largest conglomerate in Africa, industrial powerhouse, how does that elaboration on a small scale on reporting to present to the investors, to the public, the confidence is also lived from a perspective of a mega large conglomerate like yourselves. So the question is, how does governance, reporting structure, governance structure matters for long-term investors for that confidence when talking about African industrial projects?
Thank you for the question. I think governance is one of the most important things in a corporate to be able to unlock capital. You don't have to be the largest conglomerate or big company to start having a very structured board. I think even for small companies that are starting, it's very important to have a board committee, and also start reporting your financial numbers. What you find is that people start businesses, their books are not in order, they don't have a proper management or board. And then when it's time to grow the business or scale and they need funding, they spend 2 years basically trying to get everything in order before funding. They can get the funding before you can even get anywhere. So I think the work really is for businesses to start preparing for that expansion, even if it's not yet time, but ensure that governance structures are in place. You have board committees, you have audited accounts, you have reports, and you're reporting your numbers so that when you're starting to look for that big infrastructure investment, you have historical and you have credibility. Some companies even go as well as getting ratings. You might not need the rating, credit rating right now, but getting a credit rating prepares the company for that growth in 5 years. So I really think that for businesses who are really trying to expand or see themselves looking for capital, the key really is to get strong board members. Even if you're single entrepreneur, look for mentors who can be on the board, that have experience in law, that have experience in sustainability, that have experience in finance, so that your company is to the standard, and that when it's time to look for that capital, you're ready, and we don't waste 2 to 3 years basically doing cleanup. That's what I'll say.
That with you. Recently, have been in the highlights, low in. You are expanding your refinery to become the largest refinery in the world, 1.4 million. Hey, congratulations to that. That's a fantastic flag for Africa's reawakening on the industrial. So, and we have seen you also had a venture into Zimbabwe, Namibia, Ethiopia, Zambia. Let's speak a little bit about cross-border. how does cross-border industrial and trade infrastructure to do all of that requires massive capital. What blended or syndicated models have proven more effective in lower risk while mobilizing global capital on your case?
Okay, yes. So obviously, you're right. We are expanding and we're in a number of African countries, especially in the cement business. But I think what has really helped in expansion is that we had focus on syndicated model, where we don't look to one bank to raise all the funds. We look at a couple of banks, local banks, international banks, GFIs, and sometimes even NGOs, where we get a blended model so that the cost of financing is reduced. I think what has helped is track record. So because you have track record and because you have already, we have done projects that have become viable and operational, it's easier to unlock that capital. The challenge we still face in Africa is that intertrade and intermobility, there's still a lot of challenges in moving money. For example, in Ethiopia, where we have a large cement plant, we still have challenges getting our money out back to the headquarters. So there's a lot of work that has to be done in making Africa investment easier in terms of currency, in terms of moving money from one country and repatriating your profits into the holdco company. So those are one of the challenges. But I think the governments and African governments have been very excited to welcome the group into those countries. And most of our investments have brought about significant employment. And we do focus on using grassroots employment in those countries. I think where, as Africa, we need to work on is really the inter-Africa trade to help investments across the continent. Thank you.
Fantastic. Congratulations once again. We can imagine the quantity of work that you have. Sua, let's see where are the most overlooked opportunities for stage capital versus industrial power chain?
Yeah, so for us, we think that there is an untapped opportunity in investing in women-led and women-focused businesses. So we look at it from 4 different angles. So we want to invest in businesses that are either female-led or female-founded, or providing goods and services that cater to women, or businesses that are actively supporting women in their value chain. And we've seen that in Africa, there is less than 2% of capital going to female-led businesses. But on the other hand, Africa has the highest rate of female entrepreneurship in the world, 4 times more than Europe. So that disparity in itself, we think, is a very attractive arbitrage opportunity. On top of that, when you dig deeper, you find that female-led businesses are actually returning 2.5 times more on every dollar invested than male-led businesses. So it's, again, a very, very attractive arbitrage opportunity to enhance returns. But also, there's also a lot of research that shows that gender-diverse boards, gender-diverse management teams lead to better decision-making, reduce risk, improve profitability. So we also see that as a very, very attractive advantage. And we've seen that in our portfolio. We now have 14 SMEs that we've invested in. 70% of that portfolio is female-led and female-founded. And we've seen, on average, about 26x in revenue growth since when we've invested. So significant growth across these businesses. But on top of that, when larger funds have come in to invest in our business, we've seen a 7x valuation uplift compared to what we paid. So we don't think that that is a coincidence that we're seeing those type of numbers when 70% of our portfolio is female-led and female-founded. So we are very vocal about making those linkages between profitability, improved return, when you have a gender lens investment focus and mandate. And because we're investing in essential goods and services, so we're investing in import substitution, local manufacturing, we're investing in healthcare, we're investing in clean energy, renewable energy, and we're also investing in essential consumer goods like food, agri-processing. You can see that not only is it having this enormous financial return and impact, it's also having social impact, where through our portfolio, we're supporting around 200,000 direct and indirect jobs. And we've also seen significant value chain revenue for smallholder farmers in northern Nigeria, for banking agents across the country, for informal retailers, market women. So I think that there's a significant untapped opportunity across industrial value chains when you're investing with a gender lens and not leaving out 50% of the population. And you can have that simultaneous financial return and social impact through that strategy.
Thank you very much. Let's talk about a bit on the metrics very quickly. How social environment and governance, how does these metrics applied into your process for financing, and to make sure that wherever you are financing, these entities can be resilient and they can pay back on their financing that you provide to them. So how do you measure these metrics process?
All right, so we measure in a couple of ways. Financial return, we only do cash flow financing, so it's not placing SME. So we do give financing that we know they're able to pay back based on their cash flow. And then in terms of the ESG, we only finance businesses that go through our accelerator where we teach them how to measure their impact, right? So what we do is on a quarterly basis, we just ask them, right? So, how many female are now how many female are you employing? How many female suppliers, are you using now, right? And, in terms of just even energy conservation as well, are you now burning more diesel, or are you now looking at more energy efficient ways in running your business, right? And so every quarter we ask these questions, and that's how we kind of track the metrics on, are they, doing what they're supposed to do, and they putting that in mind. And one of the things as well is that just one of the companies that we funded, putting these things in place, she comes and just goes, I didn't even change my pricing, but now I can see my margins increase because now I'm more aware of those things, right? So those are the things, the metrics you should track. And
thank you. And just to finalize, Mohammed, with you, give us very clearly what the next 10 years is showing into the African industrial landscape.
Okay, thank you very much. I think the next 10 years is really focused on industrialization. I think Africans are waking up. I think Africans are also getting more educated. Africa as a continent has raw materials all the way from Senegal to Guinea to DRC to South Africa to Mozambique, Nigeria, and everywhere. We continue to export our raw materials and import finished goods. By doing that, they're effectively exporting jobs and importing poverty. We need to add value across the value chain. I use certain examples. Cement. What you need to build cement is limestone and clay. Limestone costs $10 per ton. A bag of cement or a ton of cement costs $120. Wood and furniture in Gabon. A log of wood is sold for $50 per cubic meter. Finished wood can be sold at $1,000 a cubic meter. Same thing with methanol. Your key raw material for methanol is gas. You can get gas at $2 per MMBTU. A ton of methanol is $400 per ton. For every molecule of methanol, you can create 6,000 businesses. So it's all about adding value throughout the value chain. And what does that mean for the governments? What does that mean for Africa? It means more jobs. It means more businesses. It means businesses making more money. When businesses make more money, governments make more money because they have more taxes, more value-added tax, more CIT, more corporate tax. It means them having more money for healthcare, for education, for defense, for security. So I think the next 10 years for Africa is all about industrialization, adding value, creating jobs, and of course, Africa Finance Corporation is here to find out. Thank you.
Thank you very much. Our time is up. We learned a lot. We have learned that we need to place our capital, our money, where women are in the continent. That return that women bring to business, it's very higher. It's higher than male-led business. We have learned that Africa has a bright future, that if we aggregate value, if we transform our raw materials, we can create added value. This added value goes to our tax collection, and then our governments can apply these funds for social work that needs to be done: roads, bridges, water, healthcare. And then finally, we also learn that if you do well by creating a proper reporting structure, getting a proper governance structure, and present yourself clearly in bad times and good times, you can be able to receive financing. Thank you, my panelists, and we'll follow now the conversation.
Please, a round of applause for our incredible panelists.